Yeah, so I think there's kind of three forms really that the majority of people we deal with have to still file for. I think most people will be aware that when you leave the US, as I mentioned earlier, you still have these tax obligations. That does mean filing. And so the first one is your basically your annual income tax returns. That will be on the form 1040. So you do have to annually file that with the US, even if there is no US income. So that one's quite straightforward. Now you then come on to foreign asset reporting, which is super important for people to continue to be compliant with the US. So you first of all have the FBAR. Now that is essentially just reporting for foreign financial accounts. Generally, that's only if you've got a consolidated value of 10,000 or more, which I would say the majority of people on this webinar or people that we deal with do exceed that. So of course they do have to file the FBAR, which is through form 114. You then have this FATCA, which is basically tax legislation to make sure that that countries talking to each other, and that's again another foreign asset reporting. But the threshold starts at 200,000 for that for expats. So there is two slightly different ones. But on the FATCA, for example, there's certain things to get around. For example, you don't have to file or register things like foreign personal residence or art, jewelry, and real estate basically directly owned. So those sorts of things don't have to be reported through the FATCA and the 8938. But all things like bank accounts, investment accounts, pensions, insurance products, everything like that does have to be filed through that FATCA document.